Hey everyone, BC Richfield here from the Bird Nest, where we teach you how to trade. Today we're going to be taking a look at moving averages, how I use them, ways that you can interpret them, and how I apply them to my trading. So what we can see here is we've got the Bitcoin chart on a 4-hour, and I've just got a 20-period moving average, which is the green line, and a 50-period moving average, which is the pink line. Now, there's three areas that I'm interested in using moving averages. I'm interested in the crosses, what are known as bearish crosses, if the 20 period goes below the 50 period, or death crosses, they're also known as, and also bullish crosses, or golden crosses as they're known, which is when the 20 period goes above the 50 period. Now, there's different moving averages, a load of different types and styles, and I'll reiterate this at the end. I always recommend that you go and try different styles and techniques, and when we're looking at moving averages, then go and play around with different time, different lengths, okay? There's a lot of really good information available at the Bird Nest that you can look into, and also speak to people within the community who are always happy to help you out. So the first part that I want to focus on is the cross. In this case, this is a bearish cross or a death cross, okay, which we can see right here. Now, this point where the 20-period moving average goes below the 50-period moving average, that gives us an indication that we could be looking at a change in trend. Okay. Now, it's worth remembering that these are lagging indicators. That means that they happen after the price action has taken place. So how can we use that, stop it being against us and actually use it to our advantage? So I'm going to show you how I use them. Now, this is the point in which we had the cross. What we can see here is we've got a bullish market structure coming into it, setting higher highs, higher lows. We then set this low, this lower high here, okay? And we get to a point where we're getting a breakdown in market structure. Now, because this is a lagging indicator, the way that I like to use them is if we get that initial breakdown, then I'm looking for a pullback into the moving averages, yeah, after they've crossed. And then I'm looking for a bearish reversal candle. So for me, in this instance, it would be this bearish engulfing candle, okay? Now, you could also have a pin bar candle or a breakdown from an inside bar, and that's particular to my strategy, but you know, other people will be happy to just take it based on the breakdown of market structure here, okay? Now, that's the way that we can play that. What you'll notice here is once we get into this downtrend, we get this golden cross or bullish cross here, all right? Now, what we can see is we get the cross, but price pulls back through the moving averages and continues its bearish trend. Now, what we would want to see here, as we did up here, if we were looking for a reversal, is to set this higher high, set the higher low, okay, and then get our bullish reversal candle to then take us up here, continue the market structure break to the upside. However, what you'll notice is we didn't get that down here, all right? So if we fast forward a little bit and we can see how the trend continues, okay, and as we look down here, we can see that we didn't get the cross here, looked like it was coming up, but we stay in the position, and this allows us to manage our trade on the way down. The same in the opposite if we were going up, okay? Now, the other way that I want you to look at moving averages, or certainly how I do, is looking at them in terms of helping you maintain the trend, okay? So as we can see in this move up here, as we've got the 20 period above the 50 period moving average, this shows that we're in a bullish trend, okay? And we see the gap between the two. That helps establish the fact that the trend is quite strong. Now, as we can see, as we get to the top of this trend before the reversal, how the 50 period moving average and the 20 period moving average start to converge here and get tighter. Okay, then when we have the reversal, we can see the small gap between them here before it starts to open up and go to the bottom. When we get to this point here where the trend looks to be reversing again, once again we can see how they tighten up and come into one another, okay? But that's why for me, in my strategy, I don't just want to go long at this point, okay? I want to see price go up, set that higher high, set a higher low, and then move away, because otherwise you can just occasionally get trapped on the wrong side of the price action. Now, that's how we use them when we're monitoring the trend, but there's a third way as well that I like to use them. So when we've got ourselves into trend, and I'm going to use this example over here. So we've got our bullish cross over here. Okay, so that's the 20 period going above the 50 period. Price action comes back in here. We get a bullish engulfing candle, and then we're away. Okay, once again, look, the retest of this has broken the market structure, which was heading down here. Okay, we've come in, set the low, high, higher low. As we've come up to here, the retest here, we enter on this bullish engulfing candle and we ride the market structure. Now, what you'll notice here are the interactions that price action has with the moving averages. Okay. Now, whilst we're trending, I like to use these interactions in order to either add to a position on the way up, or certainly to manage a position, or if we're not able to get in at this stage here and we're looking for a good area to get in, then we can get confluence from our higher time frames to make sure we're comfortable that we're still trending. That then adds to our theory, as we can see here with these moving averages moving up, that the trend is showing strength. We're setting higher highs and higher lows, and here, here, and here all give us opportunities to get back in. We've got a bullish engulfing candle here. We've got an inside bar breakout here, along with a pin bar, another large bullish engulfing candle, a bullish engulfing candle here, and the same again here. Okay, so that's how we can use it in order to add or sometimes get into a trend, okay, when following market structure. So look, I hope this has been helpful. If you've got any questions, please don't hesitate to drop past the nest. Tag me in the chat or one of the other team over there. Lots of very experienced traders and a really, really great community. There's information down in the comments below how you can sign up, get yourself a free trial or join the newsletter. And I look forward to seeing you around the nest soon.